Hey friends, SGT here. Thanks so much for joining us. We have on the line our friend Rory from SGT Report. Rory, how are you?
I'm doing all right, thank you. How are you?
I'm doing very well. I'm excited to have our friend Dave Kranzler back. Dave joins us from Investment Research Dynamics, and boy, do we have a lot to talk about today. But before we get started, I need to welcome Dave. How are you, Dave?
Well, thank you. How are you guys doing?
Well, I'm well, and it sounds like Rory's well. I'm not sure the state of the economy is doing very well. According to the Fed, though, it's doing so well that they've decided to lay off of QE. We can talk about the fact or fallacy of the Fed ending QE. But before we begin, I do want to just rewind time and remind everybody that on October 29th, the Fed announced that they had ended their 6-year effort to stimulate the economy. And of course, the Mockingbird mainstream media all fell into line parroting that. And immediately after, we saw precious metals absolutely annihilated. And as we've reported and Dave has reported on his website, someone or something decided it was an opportune time to dump thousands of contracts, billions of dollars of gold and silver futures on the market the day after that Fed announcement. And of course, it only got worse the following Friday on Halloween. And I do want to read this from Dave's excellent article, "They're Burning the Furniture Now." Whenever destroyers appear among men, they start by destroying money. For money is men's protection and the base of a moral existence. Destroyers seize gold and leave to its owners a counterfeit pile of paper. That's from Francisco's money speech from Atlas Shrugged, which Dave led his article, "They're Burning the Furniture Now." Dave, let's talk about this because I think in this case, the owners who are being left counterfeit piles of paper are we the people. It's our gold that has been pilfered from the Treasury. It's our gold that is probably missing from Fort Knox. It's the Swiss people's gold that is now missing from their central bank. It's the gold of the people that's been stolen by these destroyers of money, these fascist pigs, these swine, one of whom for a very long time I thought was Alan Greenspan, but now some people would argue he's a good guy, according to our friend Bix Weir, who I interviewed in detail about Greenspan now professing his love for gold. Dave, where do we begin? Let's talk first about the destroyers of money, the Federal Reserve. Did they really end QE, Dave, or is this just another mirage?
You know, that's an interesting question because technically they haven't ended QE. They've ended their systematic programmatic buying of treasuries and mortgage securities in a fixed amount every month. But they've said all along, and this goes back to Bernanke, he set the policy, they're reinvesting the interest that's generated on the mortgage holdings and on the treasury holdings. I think they have to rebate some of the interest on the treasury holdings back to the government, but at any rate, interest that's being generated off the portfolio is being used to go out into the market and repurchase more mortgage bonds and treasury bonds. And then also, they're not shrinking the size of their balance sheet because as the proceeds of the shorter term treasuries, as the shorter term treasuries mature, they're reinvesting the proceeds of that. And mortgage paper, prepays and amortizes, and they're reinvesting that also. So it's not like they've really ended QE. If they wanted to say that they were ending QE, they would start shrinking the size of the Fed's balance sheet, and they would let the free market determine the natural rate of interest rates.
Well, you're right, and also we should mention the Japanese program, the Abenomics program of picking up the slack, I guess, of where the Federal Reserve is leaving off, and what is being called openly by many pundits now a Ponzi scheme. The Japanese program here to fill in the gap for the Fed, I think, is probably being done at the barrel of a gun. I think Japan has been a warrant of the United States government since World War II, and the price will be hyperinflation in Japan. So we can talk about that, but I do want to circle back, and I want to say, I started the interview by talking about the Mockingbird mainstream media dutifully falling in line, talking about how great the economy is, and the Fed has now stepped back from QE and ended the program, and everything's worked out just perfectly. I want to play this clip for you guys from Bloomberg. ABN Amro is calling gold a falling knife, and on November 6th, this exchange happened on Bloomberg, and here's the clip.
We actually looked at 19 different gold companies 12 of the 19 at the current gold price are actually profitable. That means 7 of them aren't. Their production cost is higher than what they're able to sell the gold at. Now, if the price of gold falls by another $50, that number of 7 non-profitable gold producers actually increases by 2.
Now, guys, the reason I wanted to play that for you is the analyst himself admits that at $1,150 an ounce for gold, 7 out of the 18 top gold mining producers are not profitable. If gold falls to $1,100 or below, 50% of them lose money on every ounce of gold they mine. At $800 an ounce of gold, we can see how ridiculous this is. It makes me wonder if the powers that be are actively trying to put the mines out of business completely. Silver mines, gold mines, and the precious metals mining, so that they really truly do hold all of the gold and the people will have access to no gold. Dave, in your estimation, how absurd is it in this environment for ABN Amro to be calling for $800 gold?
It's no different than what the guy at Goldman Sachs did. I can't remember how long ago. It was sometime in 2012 where they had a forecast for $800 gold. I don't know if you remember that. And then gold ran back up. It had been under 1,300 at that point, and then it ran back up over 1,300 and stayed there for a while. So, and in the meantime, Goldman had raised their base forecast from 800 to 1,000 because they looked like idiots. We can speculate about what ABN Ambro's motives are for releasing a report that says gold's going to 800. I do think that the physical market would have something to say about that, and I don't think that anything's possible in this, given how corrupt our entire system is. But I do think there's a check and balance that's coming from Asia that kind of prevents the U.S. and the Western central banks from completely destroying and demonetizing gold and silver, because obviously there's a push over in that hemisphere of the world to remonetize gold and silver. So, again, when I saw that announcement from ABN Amro, and it's kind of, as you point out, it's ironic that they have their analyst on whatever it was, CNBC or Bloomberg, on there, making, a fundamental case for why the $800 case is absolutely wrong based on supply and demand fundamentals.
Yes, and you said that the physical market would have something to say about it if they wanted to drive gold back down to 800. And I think the quantifiable evidence of that is that the physical market is speaking out and speaking out loudly. As you've reported on, and Silver Doctors broke, Dave, the U.S. Mint sold out of all Silver Eagles, and their 2 million coin surplus, which they reported to primary dealers they had available, then sold out in under 2 hours. The physical demand in the real world is quantifiable. We can see it at the Shanghai Exchange as silver stocks are absolutely gutted. 6 weeks ago, 90% of the physical silver had been gutted from the Shanghai Exchange. And, we can see that the physical market will have something to say about this. And people like you and me and Rory and Silver Doctors and anybody listening to this material is only going to get exponentially more metal for their money as they drive these paper prices down. So one way or the other, this Ponzi scheme ends. And I think the good news for those of us who are paying attention is we're going to end up with more metal, more physical in our possession because of this criminality.
At a lower price.
At a lower price. And exponentially more metal at a lower price. Rory, if you're going to spend $500 a month on silver, and that's what you're going to do month in, month out, if it's at 50 or if it's at 10, what would you prefer the price to be at?
Wow, 10.
You get 50 ounces for your money instead of what, 10?
Instead of 5
yeah,
or 10,
it's exponentially more silver in our pockets. It's exponentially more gold in the deepest pockets of the biggest buyers. China, Russia. Look, everybody knows what's going on with this end of QE nonsense. Nothing's been fixed. The economic reports coming out from Michael Snyder paint a very, very bleak picture for the U.S. government and for the economy, the U.S. economy. It's a bleak, bleak picture. And let's talk a little bit about your article. They're burning the furniture now, Dave. Explain what that means to people.
Well, I mean, it directly relates to what Japan did with their unexpected increase in QE. And I want to circle back to that for a second, and it relates to with the way that they're just demolishing the price of gold and silver using as much paper as they possibly can. I mean, you're looking at, the open interest in silver futures on the COMEX it doesn't set a new record every day, but it brushes up against a new record high in open interest. And typically what happens is when the price of silver, at least over the last 14 years, there's been a cycle when the price of silver falls, the open interest in silver futures falls. And as the price, because that's the banks covering their shorts. And as the price rises, the open interest rises because then the banks are feeding more paper into the market to contain the price rise. And it's been cycling like that for 14 years. Well, all of a sudden now, for 13 years, because for the last year, the open interest keeps going higher despite the price going lower. And to me, it basically illustrates the degree to which they're burning or printing paper contracts to keep a lid on the price of silver. And I think the reason for that is I think there's a massive paper short interest in silver. I mean, everyone talks about the 100-to-1 ratio of paper gold to physical gold over in London, over in Europe. But I think the silver short interest, paper short interest to available physicals even higher.
I agree, and I want to back you up on that because, as I've long lamented, Nicholas Larkin from Bloomberg, right, coming back to Bloomberg again for more of that mockingbird propaganda, Nicholas Larkin on several occasions over the course of several weeks talked about the $5 trillion silver market, Dave. That's how insane it is. That's how much paper is in the market. A $5 trillion annual silver market, according to Nicholas Larkin, that dwarfs the GDP of Germany. It's completely absurd, and I think you're absolutely right. I think there's hundreds of ounces of paper silver out there for every 1 ounce of physical.
I doubt he's including the OTC derivatives that the OCC issues a quarterly report showing bank over-the-counter derivatives positions in every market. And I doubt, and I haven't looked at it in a while, because there's no way to tell exactly how those derivatives are structured. It's extraordinarily opaque. But I doubt he's including the derivatives, the OTC derivatives market. Mm-hmm. So it's probably even bigger.
Yeah, you're probably right.
Wow.
You're probably right. When we take into account high-frequency trading, which we know those trades are never actually settled in paper, DTCC, research the horrifying truth that Discovery Channel cannot tell you, my interview also with Bix Weir, we know that these trades they're not even being settled. They're being done electronically, millions and millions of ounces, paper ounces, and the trades are really never being settled. So your point's a good one. It could be much higher than a $5 trillion annual market. But
and
for
here's
him
the
to
other
say,
thing that they don't take into account. I mean, I can guarantee you that a lot of the silver sitting in COMEX vaults has been hypothecated or has lease agreements on it. Same thing with SLV. Mm-hmm. You got to throw that into the kitty also. I think he's probably just looking at publicly measurable futures and LBMA forward paper is my guess. I don't really pay that much attention to what comes out of Bloomberg and CNN anymore, or CNBC, because it's like, it'd be like reading a comic book and thinking that's reality.
I agree with you, but we should at some point, and we will talk about the Greenspan loves gold. You've written about it. I've written about it. He's calling it the most important asset now for central banks. And I completely agree with you. I don't follow Bloomberg other than to point out when they are spewing government or mockingbird mainstream propaganda on behalf of the corporatocracy. But it's a little bit like following Greenspan. When he changes his tune, we need to listen. So for Nicholas Larkin to talk about a $5 trillion silver market, which dwarfs the possibility of what the market could actually be if it were fairly traded, it warrants discussion. But I don't want to distract you from your point about the Japanese and their Harry-Carry Ponzi scheme.
Yeah, I discussed that a little bit in my They're Burning the Furniture article, and I don't think anyone, and I'm not really an avid conspiracy theorist, but I don't think anyone doubts that the U.S. had a hand in that policy. In fact, I was having a phone conversation with Paul Craig Roberts right after that happened, and he goes, as a former member of the U.S. Treasury, I can guarantee you the Treasury was in on whatever meeting occurred where that decision was made to increase their QE program over there.
Wow.
Now, I hadn't really put a ton of thought into how it connected back into our market until this morning, and it relates to whether or not the Fed has ended QE or not. And everyone, I'm sure, has seen, who's listening to this program anyway, has seen the graph that correlates the size of the Fed's balance sheet with the direction of the S&P 500. It's a stunning, probably 90% correlation, right?
Right.
As the S&P 500 has gone up directionally at probably a 90% correlation with the increase in the Fed's balance sheet. So if the Fed stops increasing its balance sheet, it would make sense that the S&P would at least flatten out or maybe roll over. Mm-hmm. Well, and obviously since the announcement of the end of QE, the S&P's done nothing but hit new record highs. Well, the thing of it is that announcement the other day fueled, the decimation of the yen versus the dollar. And what that did is it makes the yen carry trade come back into play, right? That's the trade where big U.S. funds and banks borrow in yen because the yen is declining, and they can borrow it for basically free. There's no interest rate on the yen. There's no interest rate on Japanese government bonds. So they borrow yen, they convert it into dollars, and then they plow that into the stock market. So what I would suggest is that part of the decision in influencing Japan to do what they did was that they knew that it was going to crash the yen versus the dollar and bring the carry trade back into play. And notice how the S&P 500 has gone up almost inversely in lockstep with the decline in the yen versus the dollar. And that's so in a sense, it's kind of a de facto QE, even though it's not the Fed printing money and giving it to the banks who then turn around and plow it into the stock market. But it's a way for the U.S. banks and hedge funds to borrow money at really no cost.
Yeah.
Right? If you engaged in the carry trade on Monday, you borrowed in yen, converted to dollars, put your money into the stock market, and then unwound that trade on Thursday, you not only made money on your stock market trade, you made money reconverting your dollars back into yen and paying that loan back. Right. Because it took less dollars to repay that yen loan from Monday to Thursday. You see what I'm saying?
Yeah, I do. And I just want to back you up, too, and say I want to remind people on September 1st, it was Zero Hedge that reported it settled central banks trade S&P 500 futures. So the correlation between the bank's balance sheet, the central bank's balance sheet, and the performance of the S&P 500 is, the evidence, the proof is in the pudding. They have been driving it higher. Where it ends is anybody's guess. When it ends is anybody's guess.
Well, the yen's not going to go down forever. At some point, it's going to stage a massive counter-trend rally, and that's when it could get ugly.
Let me ask you guys, I want to talk a little bit about the reverse that we saw. We're having this conversation here on Saturday, the 8th of November, and on Friday, we saw a tremendous reversal in both precious metals, silver and gold. Rory, I know you just spoke with Eric Dubin, our friend over at News Doctors and Silver Doctors, with your interview. They could conceivably kill the COMEX. Maybe we could talk a little bit about precious metals. What do you guys make of the reversal that we saw after the jobs report on Friday? First Dave and then Rory. Dave, what did you make of the rally on Friday?
Well, isn't it obvious? There were more buyers than sellers. That's the rumor I heard.
Right. I just think it makes ABN Amro look pretty foolish when they call for $800 gold, and we can see when the market learns the reality of how dire the situation is with the U.S. economy, and when people start to actually take the time to do the quantifiables and think things through, gold and silver in physical form are the only safe harbor.
ABN Amro has it. They are idiots, but they have they're talking their book. Remember, ABN Amro is one of the banks, the Dutch banks. There were two of them. I forget who the other one is. Another fairly significant one. They had gold investment programs for their high net worth clients, and you would invest in an account, and it was backed by physical gold, and then you could, if you wanted to redeem your account, you could take the proceeds in gold. Well, remember, they cut that off about 2 years ago. They changed the rules of the game with those investment accounts, and they said we're no longer going to allow you to redeem your investment in physical gold. And
Which is a
ABN was
default.
one of the banks that did that.
And
Well,
that would be considered a default, right?
No, they just changed the rules of the game. It's just like when the COMEX eventually gets out of control, they're going to go cash only. They'll say, the only selling can be done by long positions, no shorting, and all contracts are cash settled. Just changing the rules of the game. It's their divine right to do that.
Well, that's straight out of the fascist playbook, and that's what I think is so charming about these corporations and the end of rule of law in our own country is that they can do whatever the hell they want without recourse. There is no recourse for Jamie Dimon and J.P. Morgan. Maybe they pay a fine, maybe it's a $9 billion fine, but when you're making hundreds of billions of dollars doing the bidding for the U.S. government, it's a slap on the wrist. There is no rule of law, and there is no comeuppance for these criminals. They can just change the rules of the game as they go, which I think is why it's so scary for those holding only paper assets. But people have to realize when you are in a fascist system and your money and in your investments are in control of fascists, they can change the rules on you at any point. And then I guess you're just left holding worthless paper.
In that regard, I'd like to direct the listeners to my Investment Research Dynamics YouTube video channel. My co-producer, John Titus, who's a lawyer, he's producing a 3-part series on the Eric Holder resignation, and part 1 is up now. And he goes into why no one gets prosecuted anymore and why these banks can get away with this stuff with just a wrist slap. It's the cost of doing business. They get fined and that's it. No one goes to jail. And it has to do with the nature of the Justice Department under Eric Holder. And I would urge everyone to watch part 1. I don't know when he's going to have part 2 done, but I think if most of the people who listen to it and watch the video don't fall off their seat, I'd be surprised. You'll see just how completely corrupt our entire system is.
Dave, remind people the name of that because I know we posted it. We just posted it, I think this morning or last night at SGT Report. What is the name of that video?
It's called Eric Holder's Legacy, The Divine Right of Criminals. It's phenomenal.
Well, let me just give everybody real brief background on Eric Holder. He's one of the bad guys, one of the cover-up masterminds of the Oklahoma City Federal Building bombing, the Timothy McVeigh false flag. And I just need to paint the picture that this is a profoundly bad person who, of course, flew to Connecticut in the Sandy Hook cover-up and had a private meeting with all of the police officers and detectives out there. I think probably to tell them all that this was national security and they all better keep their mouths shut and, just follow the plan. Eric Holder is one of the chief boogeymen, and he was the right hand of Obama until his quote-unquote recent retirement. So I would advise everybody to check out that video. And Dave, thanks for bringing that up.
Oh, no problem. I would just also throw out the name Covington Burling because it's a DC-based law firm and I liken it to the law firm in John Grisham's novel, The Firm. That's really what it is. And it's funny because I've always thought after I started researching the whole situation with this law firm, because no one's ever heard of it. You hear about the big New York law firms. And I had concluded that it's probably the most powerful law firm in the country. And they do represent all the big Wall Street banks, and they're based in D.C. because they're there to keep the banks out of political trouble and to smooth the political system over for the banks. And my partner, Titus, video partner that is, he after he produced part 1, he called me up. He goes, you know what? Covington Burling's probably the most powerful law firm in the country, and no one's ever even heard of it. So, and you'll see when you see the video, you'll see how Covington Burling is basically one big Trojan horse of lawyers that have been put into the Justice Department to basically let Wall Street operate unfettered.
When we refer to the Justice Department and stories about the Justice Department, typically at SGT Report, if I'm posting something myself, I'll put justice in quotes because it's at this point it's such a joke. So just to remind everybody, I'll take a screenshot here. The name of Dave's video is Eric Holder's Legacy, The Divine Right of Criminals, and that's going to be part 1 of a 3-part series. Hey guys, this concludes part 1 of my interview with Dave Kranzler, Trillions of Paper Silver and Quadrillions of Fiat. Be sure to stay tuned for part 2, which we'll post in 48 hours. Gold is currency, and no fiat, including the dollar, can match it. Thanks for watching. Have a great week.